Andrew Jeffrey, a Wall Street analyst with Truist Financial, just said SoFi stock is going to rally another 35% from current prices in 2024. This is one of the best analysts on Wall Street. He's actually ranked number 69. How ironic is that? Out of 8,665 Wall Street analysts. He has a success rate of 68% with an average return that beats the S&P 500 of 15.5%. SoFi stock on November 21st, almost a month ago to the date, was at $6.41 per share. Right now, SoFi stock is $10.39 per share. That has already been a gain of about 62%. But there's potentially a double or triple from here coming in 2024, at least in my personal opinion. And we'll go over why in this video, give you the latest analyst commentary as well as breaking news for SoFi stock. We will also discuss if a short squeeze is starting for SoFi stock. At least it looks like it could be. Now, we will also look at the option activity for SoFi stock today, what the calls, what the puts look like, where the volume was at in the options market. I will show you guys my position in SoFi. Keep in mind, this is a long-term buy and hold kind of stock for me, but in the near term, I'm willing to trade this and make some upside gains as well. So I will discuss where I expect SoFi stock could go if we do go through a short squeeze, and where I think SoFi will end 2024 on a more fundamental basis. First and foremost, SoFi is grouped in the interest rate sensitive category. That's because it is. When rates are higher, there's not as much lending that happens, and SoFi is basically a lender. They have a suite of other products as well, and SoFi has done a great job of diversifying their business away from student loans, more so into investing, into wealth management, into a bunch of different sectors that are maybe not as interest rate sensitive, but the bottom line is SoFi is very dependent on interest rates. Notably, SoFi stock is up over 4% today, and there's a couple different reasons for this. First and foremost, the odds of 7 rate cuts jumped dramatically today. In fact, the markets are now pricing in 7 rate cuts for 2024. Previously, we have been pricing in 6 rate cuts since the last Fed meeting. So today is the first day you're now pricing in 7. There's a 38.5% chance of 7 rate cuts, as you can see here. There's a 34.2% chance of 6 rate cuts. So the bond market is basically saying the Fed is going to cut rates a lot more than what they think. This is mainly because inflation is falling faster than expected. Morgan Brennan, by far my favorite host of CNBC, says core PCE deflator's 6-month annualized rate has fallen below the 2% target. New Edge Wealth's Ben Emmons says, quote, "It took the Fed just 3 months of holding a restrictive rate in place since July. When the Fed funds rate reached 5.5% and treasury yields and mortgages hit 15-year highs, the 6-month annualized PCE was cut in half." So inflation is falling, the economy is holding up. That's great news for SoFi, as it means the Fed can aggressively cut interest rates in 2024. A matter of fact, 7 rate cuts being priced in for 2024 means that we're now expecting a rate cut at every single meeting for the Fed in 2024 besides January. That would be a cut in March, a cut in May, a cut in June, July, September, November, and December. Pretty soon we could be pricing in 50 basis point rate cuts. As long as that happens without a recession, SoFi stock's going to perform very well. Back to this $14 price target that analyst Andrew Jeffrey put on SoFi stock just recently. He says that, quote, "We argue earnings quality improves as mix shifts to non-lending. While some may push back on modestly lower EBITDA, we submit SoFi as being prudent given uncertain macro/regulatory environments. We believe our estimates are conservative and expect greater long-term contribution from non-lending." So this is interesting. A lot of people think SoFi is just a lender, and for the most part, the most important parts of their business are lending related. But this analyst, again, one of the best in the world, ranked number 69, he thinks that the non-lending aspects of SoFi's business are actually going to be most important. Another reason I've personally been bullish on SoFi for a long time is because of all of the insider buying you've seen over the past, multiple years. Specifically, Anthony Noto was buying stock basically every week back in 2022 at higher price points than where SoFi is currently at. And there's a lot of reasons why people sell stock. Divorce, want to buy a boat, want to buy a new house, right? Pay your bills, whatever the case is. There's one reason why insiders buy stock, and that's because they think the stock is undervalued and is going higher. The option activity in SoFi stock today as well is also notable. You have seen 21 orders from hedge funds and institutions worth $2.74 million with a positive order value of 50%. On the volume side, 69.1% was to the calls and 30.9% to the puts. So there was 2 times as many calls being bought today for every 1 put. Something else that I think will give SoFi a huge boost in the next few quarters is this. Only 60% of student loan borrowers made payments when bills restarted. In October, the pandemic-era pause on student loan payments expired, and some 22 million people had their bills due again. Just 60% of these borrowers had made a payment by mid-November. New U.S. Department of Education data shows. So that means 40% of student loan borrowers made no payment at all. Well, if their payment is too high, SoFi has developed products to extend the term, the length of the payments. So you can just extend maybe a 10-year payment plan to 20 years or 20 years to 30 years, and you can dramatically lower that payment. So it seems only logical to me that SoFi stands to benefit greatly from student loans finally restarting, even though student loan refinancing is a very low portion of SoFi's overall revenues today. Student loan refinancing is really where SoFi got its start, but SoFi is much more than that today. But certainly that portion of their business coming back to life is really going to benefit SoFi. Now, SoFi is also almost a master cross seller of different products, right? If you refinance your student loan, you're more likely to open a, checkings or savings account with SoFi, or then you're more likely to invest with SoFi. You're more likely to get an auto loan or a home loan with SoFi. That's the beautiful thing about SoFi is when they bring people in via investing or savings accounts or student loan refinancing, they tend to keep those customers and then sell different products to them. So in other words, just to boil this down in English, this is great news for SoFi stock. SoFi stock may also be in the early innings of a short squeeze, as SoFi is 15.03% sold short. 3 months ago, you were about 13% sold short, so this continues to grow. 18 months ago, you were less short than where you are now, so this could be the start of a short squeeze. I don't want to get people too excited, but shorts are starting to take some pretty big losses. You have $1.34 billion outstanding in short positions. 3.45 days to cover, 134.5 million shares sold short, 95.68 million shares currently out on loan, cost to borrow fees of about 3% for your cost to borrow max, the utilization at 34.23%, and a short score of 62.26 out of 100 according to Ortex. Overall, 15% short interest is a lot, and if it continues to look like the economy is going to avoid a recession and rates are going to be cut, basically every meeting for the Fed in 2024 starting in March, I mean, that's a very good reason to cover on your short position in SoFi. Another reason to explain some of the bullishness that we are seeing right now in SoFi is the Santa Claus rally. Now, think of it like this. If you were going to tax loss harvest a stock, you did that before Christmas because a lot of money managers, they go on vacation. They take a week or two off from Christmas until the first or second week of January. They level out their books before Christmas. So right now, most of the volume we're likely seeing on our markets, besides algorithms, is likely just retail investors. Retail investors are bullish on SoFi. We've known this for a long time. So SoFi stock continues to rally. Now, so far, the Santa Claus rally has been, good for stocks. On average, markets are higher 80% of the time from December 25th through January 2nd. That's the technical period of the Santa Claus rally. And you usually see a positive return of about 1.4% for the S&P 500. And a matter of fact, since 2002, so 21 years now, you've only been negative for the Santa Claus rally 3 times. And that was during 08, 2012, and 2018. For now, what looks like the past 5 years, you're going to have a positive Santa Claus rally. Unless something just utterly collapses by the end of this week and the start of next week, it's probably going to be another bullish year. You can also see the search trend of student loan refinancing in Google Trends data shows that really from September through November, you were at the highest levels you have seen in the past 12 months. If we take this back to 2004 until now, definitely you've seen quite a spike here. And I do think this is probably going to spike even higher as more people need to start making their payments. Some people probably haven't even realized their payments have started yet. And as you can see, the interest by region is at 100 for the United States. Now, personally, here is my position in SoFi, about $7,262, down 16.55%. My average cost is $12.43. Unfortunately, I did not take advantage of averaging down on SoFi in the way that I should have. My average was a lot higher. It used to be higher. I've just liked SoFi for a long time, but I definitely could have got that average down lower. You win some, you lose some. That money did well elsewhere also, but probably would have done a little bit better in SoFi. I do have shares of 700 currently, and this is 15.61% of this portfolio. So it's a high conviction trade for me. Now, my opinion, SoFi stock could potentially break new all-time highs in 2024 if the business continues to perform as it has been. And we continue to see the growth that SoFi has been putting up for the past 2 years now during this bear market for small and mid-cap stocks. Really, you've massively underperformed if you're anything besides the Magnificent Seven names. I think SoFi could reasonably hit new all-time highs. If not, I could see SoFi around $20 or so by the end of 2024. But if we ultimately head into a recession, then $14 or $15 could look more appropriate. But even here in the near term, it looks like SoFi stock might be setting up for what could be a short squeeze. I mean, last time we were at this level, you had resistance here, right here, and then you finally broke above and you rallied 20% in a single day. Now, considering we're 15% sold short, and it really doesn't look like a good idea to be short in SoFi in 2024, as we're now pricing in 7 rate cuts. I mean, if you get further upside from here, SoFi stock could easily start to go through a short squeeze. And a short squeeze could send SoFi stock likely into the $15, $16, $17 range in my personal opinion. If you look at some of the technical indicators for SoFi, the chart itself just looks beautiful. Again, let me point that out. The RSI is at 73.43, so it is a little bit on the overbought side, but it's pretty much in line with where the S&P is. The S&P is at 73, IWM's around 74, so SoFi is pretty much in line with the broader indexes. If you look at the MACD looks beautiful, curling aggressively to the upside, showing a lot of short-term momentum. Let me know what you think about all of this information down below in the comment section. What is your price target for 2024? Do you think SoFi stock is potentially setting up for what could be a short squeeze here in the near term future. Technically, a close above this line I've had drawn on the chart for the last 2 years, above about $10 per share, sets you up for a potential short squeeze. I mean, shorts are taking some pretty heavy losses right now. So let me know what you think down below in the comment section. Remember, this video is not financial advice. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.